Bing bong. I'm live with another edition of the State of Bitcoin podcast, where I've got the great Lawrence Lepard in the waiting room, where we're going to talk about Bitcoin, gold, all the macroeconomic kind of stuff, and we'll dive into it really deep. But first, big shout out to my sponsor, Pleb Lab. I got the t-shirt on here. They're the best hacking and co-working space in Austin, Texas. If you want to go work with other Bitcoiners, you got to check out Pleb Lab and go into there while you're down in Austin. They have, day passes, monthly passes, Nomad passes too. If you're traveling in and out of town, it's a great option. You get access to their internal communication and all that kind of stuff. So be sure to check out pleblab.com. And they've also got a startup day. So if you're going to BitBlock Boom, August 21st and 22nd, the couple days before BitBlock Boom, they're going to be having a lot of activities and other things going on at Pleb Lab. So be sure to check that out and come join me at Startup Day. And if you're going to BitBlock Boom, you can use promo code Green Candle. That's all one word, lowercase, and you could get 10% off your entire ticket. I'll be at BitBlock Boom doing the man on the street videos, kind of traveling around, sticking mics in people's faces. So come find me there and come join me. All right, enough from me. I got Lawrence in the waiting room. Lawrence, how you doing today, man?
I'm great. Thanks, Brandon, for having me on the show. It's nice to be here.
Yeah, it's great to get you on the show, and it was great meeting you at the Canadian Bitcoin conference. But
likewise.
Yeah, for sure. So, I mean, before that, let's take a step back and dive into the Bitcoin origin story, because I know you're a gold bug, so I feel like the the relationship between gold bugs and Bitcoiners are kind of similar in a sense, but there's also some gold bugs that are very anti-Bitcoin. So, how did you, I guess, get orange pilled and kind of
So
find your way there?
my sound money journey started a long time ago, long before Bitcoin was even, around, right? I mean, pre-2008, gold was your only or your best sound money choice. Now Bitcoin's a better choice. But and so I was kind of aware of it probably in 2010-ish, maybe. I heard about it through the Ron Paul circles, the Free State stuff. And and I thought this is an interesting project, but I was skeptical that technically you could make sound money on a computer. It'd been tried a bunch of times before. Gold Money and Adam Sabo and some other guys had tried it, and it hadn't really worked. But I kept an eye on it, and I thought about buying some through with paper wallet. That seemed kind of cumbersome, and I was lucky. Mt. Gox came out, and I said, "All right, a brokerage firm, I can buy some. That's good." I had the forms filled out. I was just about to wire them the money, and then they failed. So I kind of dodged that bullet, through just luck, sheer luck. And then when Coinbase came public, and big reputable venture-backed California company that could buy Bitcoin, bang, I bought some. I think it was 300 and something a coin in those days. So, and I started kind of exploring and trying to understand more of it. But my concern, I had been a technology investor for a long, long time, and sound money gold guy for a long, long time. And my concern was always, is this technology sound enough to really be immutable and reputable? I just, again, having seen the failed experiments, I thought, well, this one could fail too. And so I started going to conferences and meeting core developers. The MIT had a lot of early conferences in the early days, and I learned a lot there. The halving, the difficulty, all the things that we all know now that make it what it is. SHA-256 and the cryptography, the blockchain, et cetera. So, and it became clear to me over time that actually it is what it says, what they said it was, which is really sound money that can't be changed, and with a mathematical formula and so on and so forth. And so, my conviction just kind of grew and grew and grew. Now, I was always quite convicted, still am, that gold is a great form of sound money, not as good as Bitcoin, but good. The government can't print it, and that's a huge advantage, right? And gold has protected you from government printing to a degree. A lot of what I consider should have been the excess has been taken away because they've manipulated the shit out of it, as we all know. But it has worked. I mean, it's gone up 8% a year compound since 71. That's better than zero. It bought a men's suit in Roman times, still buys a men's suit 1 ounce. So you've kind of you've got gold ticking along as big old analog sound money, and then along comes this new form of sound money, digital sound money, which has a gazillion other advantages, and it's not very well known or adopted. And so you've got two things pushing the Bitcoin price higher. The fact that the fiat currencies are all getting debased enormously over time, and eventually will be completely debased, i.e. worthless, which is hyper-Bitcoinization. And then you've got the fact that, you've got this new form of sound money, which is not widely known, not widely distributed, still in the early infancy days. And more people are going to come and realize that it's really, it's gold that doesn't cost money to store. It's gold that can be transferred in 10 minutes. It's gold that's deflationary, not inflationary. I mean, even in the case of gold, the supply of gold will double in the next 40 years. It grows at about 1.8% a year. So you compound that, we're going to have more gold. And of course, as we all know, the supply of Bitcoin is fixed. And so that makes it a deflationary currency, which some people say is bad. I think it's obviously good. Following along Jeff Booth's thesis of how the world is relentlessly deflationary. And so, that's kind of how I migrated. I just kept an open mind to it. And I was always techno savvy because I'd been a venture capital investor. I'd seen the internet and I watched the network effect take place in the internet. And I think there's a big network effect taking place in Bitcoin. I mean, of course, in the early days, one of the great things, well, what was the predecessor to Facebook? There was another predecessor.
MySpace?
Yeah, exactly. This is MySpace to Facebook. And that was always a concern. A lot of people in the early days, but then you came to realize, well, no, because not everyone's going to MySpace, and it's like Google today. I mean, nobody's going to supplant Google as the leading search engine because everyone goes there. And so, networks as they grow, they grow geometrically and they become more valuable exponentially. And that's really what's going on with Bitcoin. I think the odds of somebody coming and supplanting Bitcoin, a better Bitcoin coming along, have kind of dropped to zero. And there might have been a time earlier on when there were a lot more competitors and as we all know, we had fork wars and we had block size wars, and there have been a lot of issues as this thing has grown up. And even as recently as not that many years ago, there were some security problems and some breaches, and the core developers have kind of the community has done a good job of holding it all together. And so I've grown very comfortable that the technical risk is quite low, and I see continued adoption by any metrics that you want to look at, wallets, addresses, number of coins per address, etc. And so to me, it's a matter of time until everybody realizes that this is your superior savings form of money. I think the highest and best use case in my view is store of value. The remittances are great. Lightning's great. I think it's going to take over a lot of different areas, but the most obvious to me is store of value. And so there's 400, depends on what you want to measure, but there's 400, 500, 600 trillion dollars of assets out there, and Bitcoin's not even a half a trillion, or maybe it's just over a half $1 trillion of value. And as more and more people come to understand it, more and more people are going to park their money in Bitcoin. And as I know and I know that the prices are just going to be much, much higher. I mean, what are there, 21 million coins or 40? I heard the other day that 40 million millionaires in the world. So if every millionaire wanted to have just one Bitcoin, they couldn't do it. I mean, so what does that tell you, right, about where the price of Bitcoin is going? It's going higher.
Yeah, it definitely is. I mean, I feel like, as you and Greg always say, it's just math, right? But
Right.
it is interesting your journey, right? But because you said you were kind of like, in the tech venture capital space. So, did you avoid, I guess, going down the shitcoin rabbit hole and that kind of avenue as
That's a
well?
great question. No, I can't say I totally avoided it because I, like so many others, I thought, well, maybe one of these others is going to work. So I confess I own some Ethereum and I own some Litecoin. And I was smart enough or lucky enough when I could. Remember when they forked Bitcoin a couple of times? It was Bitcoin Gold, but Bitcoin Cash. I got those, and if they were tradable, I sold them and just bought the major coin because I was pretty sure the forks wouldn't work. But no, I never promoted the shit coins, and I never went crazy on them. But I used to be of the view that there was a place for shit coins, and some of them would get used. And before Lightning came along, I thought, well, maybe it was clear to me that Bitcoin was the superior store of value because of its size and the just the different. I mean, the way it was constructed, it was going to be the store of value case. But I thought, well, you know what? Somebody's going to make another coin that's really good for transactions. That's cheap. That would for under a penny per transaction, you can transact digitally. And of course, I couldn't see the Lightning Network; it didn't exist. And so, I was wondering, well, is that going to be Litecoin? Is that going to be Cardano? Is it, what is it going to be? There might be some other solution. So I owned a few of those for a while. But as time went by, particularly when Lightning emerged, it was like, and as I got to see the monetary policies of those other coins like Ethereum, I've been like, what does he change that policy like 6 or 7 times? And I mean, it's just like, okay, you really don't have a cap on the number of these things. So why do these things have any value? I mean, the whole value prop of Bitcoin, as we all know, is the cap on issuance. And And frankly, that's one of the things that really disturbs me. I've heard from time to time, not many, but I've heard a few Bitcoiners. I was on the stage with one over in England who said, "Well, the cap's a problem. We got to maybe grow the cap at some slow rate to account for more usage in a bigger world." And I was like, "What the fuck are you talking about?" I mean, you know, first of all, there's no way the nodes and miners and everyone else going to agree to do that. But second, if any core developer proposed that, I hope they'd be laughed out of the room. The cap is the cap, period. So, yeah, so I had a little bit of a shitcoin experience, thinking that maybe some of them would work, and now I'm pretty sure they're all going to die. I could be wrong about that. One or two of them might make it. I don't know.
Yeah, I mean, it seems like that's kind of the way that things are trending, right? I mean, it definitely seems like Bitcoin is king, and I think to a certain extent, everybody kind of had that like crypto curious aspect of things, is what I guess I'll call it. You know,
Yeah,
I mean, I want to dive into the dichotomy between gold and Bitcoin, because
sure.
obviously Bitcoin has all the sound money principles similar to gold, but obviously in the kind of the growing digital age, it seems to make a lot of sense. But it seems like there's a difference between the gold bugs and the Bitcoiners, where they kind of agree on a lot of things, but for some reason a lot of the gold bugs aren't coming around to Bitcoin just yet. Why do you kind of think that is?
That's
And
a great, yeah, that's a great question. Let me just give you some data that I think you find helpful. I go to gold conferences. I speak at gold conferences. I always ask, how many of you guys own Bitcoin? About half the hands go up. So, there's a lot of overlap. I think gold people are generally speaking Austrian economists. We all know that fiat's doomed. So in that, gold people and Bitcoiners are completely aligned. They hate fiat. They know the government's debasing their wealth, and that it pisses them off. Okay. Um, some of the gold people, I think, have been locked in kind of the old mindset that if you can't touch it or feel it, it's not real. They're not digitally astute. They don't understand what immutable digital stuff is, and frankly, I get it. Everyone was skeptical of it when they first heard it. Some of the gold people, they look at guys like Sam Bankman-Fried, or even guys who I think are pretty legit but very promotional, like Pomp, and they say, "Oh gosh, it's just a lot of arm waving and promotional crap. How can it be sound money when it's got these clowns in it?" And obviously the shitcoiners, in my opinion, did a lot of damage to the underlying thesis of Bitcoin. Bitcoin's a legitimate technological innovation. The shitcoiners are not. They are unregistered securities where they can, usually the people at the top control the issuance, and they've issued themselves coin, and they're running pump and dumps. So, and gold people are good at sniffing out fraud. And so they see that and they go, "Oh, I get it. These guys are fraud. Yeah, therefore everything in this area is fraud." And they haven't taken the time to understand technologically what Bitcoin is and why it's different than shit coins, and why the Sam Bankman Frieds are not anything like any real Bitcoiners would ever be. And what's ironic is many of us who saw Bankman Fried on the stage at these shows and so forth, we knew this guy was a bad guy. It was not hard to figure it out, and but the SEC let him run wild, and it ended as we all kind of knew it would, in tears, and so on and so forth. So, but gold guys, I don't know about Peter Schiff. Maybe he owns some Bitcoin secretly. I don't know. His son does, which I find interesting. But I don't know. I think some of it's a generational thing. They don't want to spend the time to understand it. Gold has served them well, and so on and so forth. But I found over time, I've had many people I ran a fund that was only gold and silver miners pre-Bitcoin. And because I started the fund, actually started in 2006, um, and I've had a lot of those people be very suspicious of Bitcoin, and I've converted them, by explaining why it makes sense. And then, just so you know, that fund right now is about 85% gold and silver miners, because that's what people invested in me for. But it's about 15% Bitcoin and some Bitcoin companies. And I've had a couple of people leave me, say, "I was only with you for gold and silver. You didn't do this other shitty stuff. I'm out." I was like, "Okay, fine." The way I justify it, I say, "Look, you guys, I'm supposed to be protecting you from inflation, and I'm a sound money fund, and if I didn't have the soundest money on the planet as at least a piece of my fund, I wouldn't be doing the right job for you." And the reason it's only 15% is the volatility. I've got investors who tend to be on the older side, a lot of boomers. And for older people, and for young people, the volatility is like a plus. Like, okay, I'll buy it when it's cheap, I'll sell it when it's dear, blah blah blah. For older people, it's a scary thing, because you take a lot of your wealth and you're 70 years old and you put in, you have a 70% drawdown. Well, that scares the living shit out of you because you don't have the time to recover that a young person has. So that's why I've weighted it the way I've weighted it in the fund. And I think, I understand gold people. I try to be kind to them. And, as long as they're open minded, I understand why they're skeptical of it. I get it. And also look at it from their point of view. A lot of them have been fighting this fight for 30 years. Then along comes this better, more shiny object. And it's kind of kicking their ass. And they're like, Jesus Christ, and it feels very unfair to them. I get that too. But my view is you got to adapt to the times, right? I mean, you get new information and you adapt. And we're still very much in the early days of Bitcoin. It's like I try to emphasize to them they're not too late, particularly with it here at 30. I mean, it was at 68. Obviously, it was less of a deal, but it's a great deal right now. It was a great deal, 6, 9 months ago at 15, right? A really great deal. So, and I say you got to buy the dips and you got a dollar cost average. And I've got a lot of my clients doing that now. So that gives you some background on that.
Yeah, that's great stuff. And I mean, it seems like it's kind of, I guess, maybe it resonates more with people a little bit now. It seems like you kind of had people that already had the hard money principles, right, of
Right.
gold and silver and other things like that. But I mean, do you think like the massive amounts of money printing that we saw in 2020 and kind of like the crazy inflationary times, you think that's kind of, I guess, leaving people more open to the opportunity of Bitcoin and kind of, I guess,
Absolutely, absolutely. And I think, I mean, with each down cycle and recovery, more and more people get converted. Do you know what I mean? I mean, 1,000 down to 300, and then 17,000 down to 3,500, and I mean, each time we're seeing higher highs and higher lows, and yeah, I mean, the other thing I think really woke a lot of people up was just the explosive nature of Bitcoin. I mean, as you'll recall in 18, 19, I mean, those couple of years, it traded between 5 and 10K for a long time. And then bam, it was at, 50. And I mean, this is a sharper spear. I mean, it's what, Paul Tudor Jones says. This is the fastest horse in the monetary debasement race, or I like Luke Groman, who he says, this is the only functioning fire alarm because the price of gold has been suppressed. And when Bitcoin went from 10 to 50, I mean, I think a lot of people woke up and were like, holy shit, this thing's real. And they're going to be, my view is they're going to be equally surprised when it goes from 15 or 30 to 150, and then again, they're going to be surprised when it goes from 200, 150 to a million. And we're going to just continue to see these cycles. And as you know, they're based on the 4-year cycle of the halving. And so, I fully expect that, we'll come out of this year in the 50, 60 area, and next year we'll be up through 100. And, then we'll really ramp off of that the way you do kind of, 12 to 18 months after a halving. And, we'll have $200,000, $300,000 Bitcoin. And honestly, at that point in time, if, you're overweight, probably wouldn't be crazy to sell a little bit and, either use it to buy it when it comes back in, or put it, diversify your assets. I mean, I know a lot of people are 100% Bitcoin. I'm not, but, I'm like 50% gold and silver, 50% Bitcoin personally. So, to me, they balance each other out. They're both forms of sound money. One is analog, one is digital. And, the digital form is growing much more rapidly. Adoption is growing much more rapidly. Gold's been around 5,000 years. So, and the price, by the way, the price of gold has never gone up 5x in 18 months. It just hasn't happened. A big up year for gold is 30%, but in turn, a big drawdown for gold is 20%. And as you and I both know, we've had some drawdowns in Bitcoin, and we had 90%, 80%, 70%. That's a pretty big drawdown. And, some people are, I mean, the way I handle that, the way I advise others to handle that is you just you don't put all your eggs in that basket. I mean, if it's got a lot of upward optionality, which it does, then you make sure you weight it accordingly. If you have, 4% personal weighting into Bitcoin, it draws down 70%, you're not getting wiped out. You use the drawdown to buy more. I mean, that's what I did. I was buying pretty heavily in the fall of 2017 when it ramped up to 17,000. Actually, I think I might have hit 19 very briefly, but for a while it was in the 17,000 range, and I was buying, and I bought a lot at 1,000 and 2,000 all the way up, and then it crashed. It went from 17 to 10, and I doubled down. It went from 10 to 3.5. I doubled down again. So I mean, it's kind of like you got to be, you got to know what you know and know why you own it and be prepared. I mean, the Bitcoin I own, I have a very long-term time frame on. I don't intend to sell any of it. It'd probably end up going to my kids. So.
Well, it's kind of interesting that you're lining out, we're talking a little bit about price action too, because obviously, as you lined out, Bitcoin's very, young, right? I mean, it's been
Right,
in the late 2008, 2009 time is when, it kind of, came
right,
into the scene. And, since that time, we've had basically a decade long of, zero rate or 0% interest rates.
yep,
Obviously, 2019, the hiked a little bit, then pulled back.
yeah.
And now we're seeing massive amounts of inflation. Well, it is kind of interesting, right? I mean, the macro environment right now is a little hairy.
Oh,
Come around the come
a
around the
little,
time. Yeah, let's dive in.
a
What do you
little.
like?
Yeah, it's massively hairy. I mean, shit's breaking all over the place. I mean, look, they've thus far they've been effective at sweeping it under the rug, but Silicon Valley Bank, Signature Bank, Credit Suisse. I mean, they look they must inflate or die. And in the leveraged credit based system that we have, what Powell is doing is an elaborate bluff that cannot last forever. Or to the degree that he tries to make it last forever, we're going to have something that's going to rival the Great Depression in terms of a downturn, in terms of failures. And look, economies spiral up as credit is created, and they spiral down as credit and values go down. And they obviously got carried away with COVID and grew the money supply 42% in 2 years and sent checks to everybody. And, it kept everything going, kept the economy going. But, it sure wasn't transitory inflation. They told us it became red hot inflation. And of course, now they're trying to solve that. And that's why the price of Bitcoin is down. The price of gold has been softer than it otherwise would have been. But they can only continue this act for a certain amount of time, and then you watch they'll pivot the exact same way they did from, inflation is transitory to oh my God, we got an inflation problem. And so, at some point here, what we're going to see is that we're going to have a, oh my God, we got an economic collapse problem. The bond market's falling apart, the stock market's falling apart, the economy's falling apart, unemployment's rising very rapidly. Okay, fine, what do we do? What's the playbook? Well, we know what it always has been since 1971. We take interest rates down and we print money, and that's what will happen next. And when that does, Bitcoin will squirt through a couple 100,000, and gold will squirt through 3 or 4,000. And once again, these assets will protect us from the debasement that's occurring. And in that next round, the Fed balance sheet won't be 9 trillion; it'll be 17 or 18, and federal deficit won't be 32 billion trillion, it'll be 45 or 50. And gasoline won't be $3 or $4, it'll be $7 or $8. And I mean, it's and so on and so on, right? I mean, that's the system we're in, and it's broken. And that's why more and more people are coming to understand that these assets are really important, in terms of preserving wealth. I mean, real estate works too. I mean, basically, what's the problem? The problem is the government can't. They've got a spending problem. They can't. It's like a drinking problem. They try and solve too much drinking with more drinking, and that drinking really is just printing money, and that's going to lead to currency debasement. And ultimately, I think and this is hard to tell when, but I kind of pointed as between some 2028 and 2035. I think they're going to lose control of the whole damn thing, and the currency is going to be worthless. But that's an extreme statement, and I could be wrong about it. But that's how if you kind of look at the history of arcs of inflation leading to ultimately hyperinflation, that's kind of how they take place.
Yeah, I mean, it seems like we're kind of like almost in that space right now. I mean,
Oh yeah,
you look at the CPI print, right? They're manipulating it and it's getting lower and lower, right? But it
yeah,
doesn't seem like inflation is going anywhere, and obviously that's compounding from the
yeah,
8% last year to the 4% this year. That's obviously compounded over time, and it
yeah.
seems to be getting worse, right? And the inflation's staying sticky. So I mean, the Fed's almost trying to like. It seems like their only card in their playbook is to raise interest rates, right? I mean, but we've
Right,
had the economy that was essentially shut down for months at a time with COVID, and then now the massive amounts of money printing. It seems like it's a recipe for disaster, but we're kind of, I guess, in this stage right now where we're floating along, and everybody's kind of,
right,
I guess, just dealing with the times, right? If you look at the data that the Fed has kind of spoke on, right? You named unemployment, right? It hasn't gone up as quite as drastically as they
right.
think it should have by now, and that they're still going to kind of
Well,
continue.
and keep in mind they use a birth death model. They've got none of these numbers are trustworthy, Brandon. I mean, they're all bullshit. I mean, the inflation rates are much higher than they say they are. unemployment's probably much higher. They've redefined unemployment to, once you drop out of the workforce, you're no longer unemployed if you've been out for a certain period of time. I mean, we live in a big house of mirrors that, they're just trying to keep it all together and keep us all happy, and they lie to us about everything. So, it's pretty hard to really gauge what's truly going on in the economy. But I think the economy is a lot worse than most people realize, and I think that, you can only, what people are doing right now is they're living off their credit cards. The credit card growth rate is just, it's going through the moon. And the related issue that, this all comes down to confidence in the fiat currency, confidence in the Fed, confidence in the dollar, which in turn all comes down to, what's the government fiscal situation look like, or financial situation. And as you know, we got 32, we had 31.4 trillion. It's now grown 800 billion in, less than a few weeks of June. It's going, there is no limit until January of 2025. And you just know this debt's going to get bigger. I mean, in the GFC coming out of 2008, we printed $3 trillion, and it took us 3 or 4 years to do that. I mean, this time around in 2019 to, 2021, where we had the COVID event, I mean, we printed $6 trillion, and it took us under, 6 months or a year to do that. So, the next time around, we're going to print $12 trillion. And this is how gasoline gets to $8 or $9. And this is just, I mean, they are robbing us blind by diluting the value of the currency. And so anyone who has any savings, absolutely positively, has to convert those savings into something that can't be printed. And physical goods, food, guns, real estate, Bitcoin, gold, silver, they all qualify as tangible things that the government can't just print out of thin air.
Yeah, and I mean, you brought up the statistics too, right? I mean, I on the unemployment note, I mean, I saw something the other day that said 650,000 Americans over the age of 80
Right.
working last year, which is 18% more than a decade earlier. So, I
Yeah.
mean, that's probably inflating those employment numbers as well, right? I mean, we
Sure.
have people working later in life,
Sure.
like not able to retire.
Well, that's the thing. I mean, think about it. It's really sad. I mean, if you retire, you have a certain set amount of money coming in, either through your pension, your Social Security, or your savings. And you might, most people, I think, when they do the retirement equation, think, okay, I'm 80, I could live to 100. The odds are pretty good I'm not going to make it beyond that. So this money's got to last me 20 years. Well, if suddenly you have a huge spate of inflation, that's a problem, right? You're looking at running out of money. Now, if you have relatives, they'll take care of you, whatever it might be. And that's retiring at 80. I mean, in general, what a lot of people were trying to do is retire at 65. Well, given that, generally speaking, not entirely, because some death stuff is getting bad, going the wrong way. But I mean, in today's world, compared to 50 years ago, in today's world at 65, you've probably got a life expectancy of another 25 years. You're good odds you make it into your 80s or 90s. And so, you got to have enough. It's very hard to know what's the right number to have saved up, because you don't know what the inflation is going to be. You don't know how much they're going to rob. I mean, I saw my dad retire, in his 60s, and had a fair amount of money. By the time he passed, it really wasn't very much money anymore, because the cost of everything gone up. So, and I think everybody's faced with that problem. It's got people working longer. And that's part of one of the evils of fiat, is that, nobody can really retire with any sort of sense of security, because you just don't know how quickly they're going to take your money away from you, or the purchasing power of your money away from you. And you don't want to be 85 years old and eating cat food because you can't afford steak.
I
It's
mean, that's unfortunately the situation that we're living in, right? I mean, it's
right.
hurting people on both ends, right?
Yeah.
It's hurting the people that are retiring, and they're having to go back in the workforce, and it's also hurting the younger generation that's trying to get in and live.
Absolutely. I mean, I look at my kids are all in the 20s, millennials, and they're all doing fine, making decent salaries, but it's kind of like, gee, Dad, how am I ever going to afford a house? They've never
Exactly.
been less affordable. There's very much a housing bubble, just like there's a bubble in all assets because of all this money floating around. And of course, now the interest rates are being jacked up. And that's the other thing I want to point out. This interest rates being jacked up really is the pin that I think is going to pop this bubble. I mean, it's taken a while, but we saw what it did to Silicon Valley Bank. And there are a lot more Silicon Valley banks out there, in my opinion. We just haven't found them yet. So that's coming to a broader swath of companies. I noticed, I put up in my Twitter feed recently, I saw bankruptcies. Rate of bankruptcies has gone up substantially since these interest rates started going up. The other interest rate chart I think is really fascinating. You can Google it and just put in, U.S. federal government interest expense, by year. And if you look at it, 2 or 3 years ago, we were in the $200 or $300 million a year, or $1 billion, I'm sorry, a year range. And now we're kind of at 800, 850, going to $1 trillion. And of course, by raising interest rates to fight inflation, the U.S. federal government is running much larger deficits to pay that interest. And so, in my opinion, there's a natural limit to how far Powell can go here, before everything blows up, including the deficit. And the other thing that's going on that I find interesting is that there just aren't many people buying our bonds anymore. Chinese are reducing their balances. Japanese are reducing their balances. A lot of people are, people aren't willing. They're looking at the U.S. and they're saying, "Hey, this kind of looks like a third world country. You guys are, printing a lot of money. You're spending a lot. You're spending a lot more than you should. You're running a huge deficit. You're not willing to control your entitlements, and as a result, we know that you're going to monetize this debt. Therefore, we know that the dollar isn't going to have as much purchasing power. In fact, I think that's the next big move out there right now. Dollars in the 103 range right now. I think the dollar is going much, much lower. I really do. In fact, even Yellen said that, we could use a lower dollar, and people have talked about, hey, the U.S. losing some of its reserve currency status wouldn't be a bad thing. And I think that's right. I mean, I think we have to do that. But in turn, what that brings here is more inflation. And, my view is this next decade is going to look very much like the 70s, where probably the biggest economic risk to the average person is inflation. Whatever you have in savings, if you're not investing it in a way that will increase its value to match inflation, you're being robbed. You're losing value, savings value over time.
Yeah, and I mean that makes a ton of sense, and obviously, that there's the hard asset aspect of things, and it seems like inflation is just going to be running rampant, and we've had Yellen said that there's room for multiple global reserve currencies. I mean, they just kind of hinted. I mean, at first it was inflation was transitory, and now it seems like they're essentially priming all of us to be
Well,
ready.
that's correct. I mean, I don't know if you've also seen. I mean, it's subtle, but in several places it's come out and said, well, maybe 2% is not the right target anymore. What I mean? Maybe we can live with 3 or 4%. And I think the reason they're doing that is to condition everybody because, they're going to at some point here. I mean, look, the Fed has three mandates, right? I mean, we know the first two have stated, full employment and stable or low inflation, which they've somehow interpreted as 2% a year. I mean, my view is low inflation is zero. But whatever, they've come to the conclusion that we can tolerate and we should want 2% a year, and that's Keynes and animal spirits. That's a whole different line of thought. But the third mandate that's not written down, but we know they have, is what I call financial stability. And in other words, if a bubble bursts, if things are really hectic and the economy is taking it in the chin, they're going to drop interest rates, flood the system with money, open up the discount window, et cetera, in order to prevent large things from failing. And they did this in the bubble coming out of 2000. When the dot-com bubble burst, they dropped rates, substantially to try and get things going again. And what that did was it created a bubble in housing. And of course, then that one burst, and they dropped them again. And what they've now created, in my opinion, is the everything bubble. They dropped them so low and held them so low for so long, and then follow that up with the COVID event and all the money they printed there, that we can't really turn back now. I mean, we're kind of in a death spiral, and absent a major restructuring, I don't know how we get out of it. I think it's going to sadly continue to get worse, and inflation is going to continue to rage until such time as that becomes the major issue, and maybe we'll do a financial reset or you know a devalue of the dollar, something akin to what Roosevelt did in the 30s when he devalued the dollar. I mean, this is what we're going through right now is a sovereign debt crisis, and it's very much a parallel to the sovereign debt crises of the early 19th century. I mean, those all occurred as a result of World War One. But we had a bunch of them in all the various countries in Europe, and we're having one here right now. In my opinion, it's early days, but it started in '08. They got it all back under control. It seemed calm for a while, but it seems to be accelerating again here.
Yeah, and it definitely seems to be accelerating at the very least, right? I mean,
Yeah.
it's like we're at a house of cards right now, right? I
Oh
mean,
yeah.
like, what is it going to take for this house of cards, I guess, to pummel? Do you think is it going to be like just Powell essentially just continuing to raise interest rates? Do you think that's the right move, or like, I mean, I don't know. I
Well, look,
personally, I
I
don't
wouldn't
think
want his job no matter what because he's damned if he does and he's damned if he don't. He
exactly.
doesn't. I mean, I don't know what he'll do. They generally get it wrong, so he'll probably keep raising rates until something breaks. I think the something breaking is the banks. They've already started to break. More of them will break. I think two related things that will break are the stock market. I think the stock market right now is on hopium, thinking that that he's going to pivot soon and more money is coming, free money is coming their way, and so it's being held together. I think the fundamentals of the economy are going to get to the stock market, and that's going to break. And then probably the biggest one, the big enchilada, in my opinion, to break is the bond market. The bond market still is somewhat believing that we can go back to 2 or 3% inflation, and in my opinion, we can't. And so, and the bond market is, the interest rate is the price of money, and it's sent by the supply and demand. And the supply is, the amount the government wants to issue, and the demand are what investors are willing to buy. And the supply right now, I mean, we've got 32 trillion in debt, like 8 trillion of it rolls over in the next 12 to 18 months, and we're running a $2 trillion deficit. So they've suddenly, because we've financed so much of it short term because there wasn't a lot of demand on the long end of the curve. We've got a lot of money that's very subject to these interest rates. I mean, if Powell keeps going and he takes the Fed funds rate up to 6, 6.25, 6.5, everything's going to break, in my opinion, including the bond market, and because there just aren't enough buyers. And so, at that point in time, I mean, right now the government's selling bonds through QT, I'm sorry, yeah, quantitative tightening, and so um, the demand just will not be there, and they will have to go to yield curve control, in my opinion, which is a resumption of QE, which is a resumption of printing money. And so I think we have those things in our future. It sure is interesting to watch Powell trying to bluff and pretend that they're not there, and that's, to my way of seeing it, that's what he's doing. Excuse me, but he's got a very hard hand to play because the math is relentlessly against him.
Yeah, it definitely
So,
seems like everything's stacked against him, but I agree with you. I would not want his job. I mean, I
mm,
don't know if there's any money in the world that could make me want his
yeah, no, he's
position
it's
right now.
it's it's karma that he's there because he's got such a big ego that he wanted to get reappointed. Anyone with half a brain could look at what was going on when his appointment came up a year or so ago and say, "Holy shit, this guy's got half a brain. He'll get the fuck out of there and declare victory," right? But he
Yeah,
didn't. He's like, "Oh, I don't want to be the first guy to not get reappointed." So he campaigned to get reappointed. He got reappointed. Well, okay, now what? you know, I mean, he's gonna, no matter what happens here, and it's hard to tell exactly what the roadmap is because it depends on what they do. I don't see how he gets out of this without having a terrible reputation for being responsible for things really being in a bad position.
yeah,
So,
exactly. Well, I mean, it seems like you think we're in the camp for more a more pain ahead, right? So, I mean, do you
yeah,
think? I'll ask you, like, if you go on like the financial Twitter side of things, there's
yeah,
really two camps, right?
right,
There's one that looks at the rearward data and says we're not in a recession yet because unemployment's not very high. The CPI print came at 4% last month. Those kind of metrics, they're looking at all that kind of stuff. And then there's the other side of the camp, which looks at everything under the hood. We got credit card debt at an all-time high. We got personal savings at an all-time low. We
yeah,
got basically all these bubbles, student loan repayments not even going yet.
right.
So many things and so many cracks underneath the hood.
Yeah, there are a lot of cross currents, and it does make it tricky. I mean, I look at the TSA data, and people are still traveling. I look at the open table data, and people are still going to restaurants, and but you're starting to see at the edges the fraying. I mean, you're seeing more delinquencies in the cars and more delinquencies on the mortgages. You're starting to see some of the employment stuff go in the wrong direction slowly. You're seeing some companies are getting hurt, in terms of results. I mean, Micron semiconductor manufacturer just reported dreadful results. I mean, just huge losses. Um, you know, I mean, it's a big, robust economy, and we printed a lot of money. I mean, I've heard as many as 20% of the economy is being paid by the government in some form. So if you're getting a government check, you're not really at risk of, losing your income stream. We don't have a highly levered housing market the way we did in the 80s. The bubble's kind of subtle, but it's there. And I think it's going to come about when I think the biggest thing that's prevented Bitcoin and gold from going to the moon is that the stock market has really felt like a one-way bet for most people. And that's in large part because we had enormous deflation from 1980 to present. And in a deflationary environment where interest rates are getting lower and lower and lower, the value of stocks gets higher and higher and higher. And you're seeing this echo bubble. I mean, 2021 or two was the worst market in a long time for both stocks and bonds. And yet, they came roaring back. And so I think 2021 was an enormous bubble top. We went down roughly 20% of the stock market. Now we're back another 11 or so. So stock market off the peak is only down 9%. So this bubble hasn't really burst, but it reminds me, Brandon, very much of what happened in the 08, 07, 08 area, which is to say, it takes a little bit of time for things to flow through. I mean, if you watch The Big Short, I mean, Burry was hurting in 2006 and even in 2007. And, then in 07, in the summer of 07, the Bear Stearns CDS funds, real estate funds blew up. And everyone was like, oh, that's interesting. What's that mean? And we all knew, I was an investor back then, we all knew that there was an enormous housing bubble based on unrealistically low interest rates. I mean, there was people were standing in line to buy houses. It was the same old crazy, crazy stuff. So we could see it. But, if you could see it as early as 06, 07, and guess what? It didn't become a real issue until September, October, November of 08. So, the time between when the first, cracks obviously appear and, you hit the bottom, it could be a while. But if you look at, I mean, my view is, we're starting to see cracks now. Silicon Valley Bank broke, and that was a big one. And so, I would expect that in the next 6 months, there's going to be a lot more negative news on the things we talked about, employment, inflation, the economy, etc. I think it's all going to go in the wrong direction. And at some point, panic sets in, and then it can go too far in the wrong direction. But that also, can be a real fuelant for somebody who's got a good business and knows how to take advantage of it. So.
Yeah, I mean, it seems like there's been like a lot of, I guess unrealistic businesses that have been, in this zero interest rate environment, right? I mean, they've been essentially not making a profit for, years at a time, maybe even a decade, and they just keep getting funded because money was cheap, essentially. So, I mean, it seems like it helped like fuel a lot of the tech growth and other things like that. But, Powell tried, it maybe saw the writing on the wall in 2019, but, quickly, as you said, like maybe it was his ego or what, he wanted to be reappointed. He quickly reversed course, but now it seems like he's kind of scrambling to, I guess, make up for lost time in a sense. But, it seems like it's almost obvious that the money printing is going to come down the line. But, I'm curious how you think like Bitcoin's going to react, because, you alluded to, potentially Bitcoin shooting up, but this is the first time we're going to have a halving where, where the economy.
Yeah. No, I know which has led some people, and also the supply of available coins. I mean, there's been some great work by, I can't remember the guy's name, but he was on a podcast recently. He remains anonymous. He was Carrot, maybe something or other.
Yeah, Rational Root. Yeah,
Rational Root. Yeah, he identifies as a carrot, right?
Yeah.
He was on Peter McCormick's podcast. They had a carrot in front of his face, but and as he points out that there's a lot less Bitcoin actually on exchanges available to be traded. So you get less available for trade. You get a halving cycle taking place, and then you add on top of that, a flip in the Federal Reserve policies that leads to massive additional money printing. And his view is, hey, the last cycle was kind of truncated, maybe because of the Chinese miners going offline. There are a lot of reasons and theories for that, but he thinks that there's a chance this next cycle takes us to 500,000 a coin. Look, none of us know, and we can't predict that. I'm not counting on that. I'll be pretty satisfied when we break the old time high of 68 or 9. And when we kind of break through 100, I think, then that'll be just another touch point for everybody who's watching it and skeptical to go, oops, yep, it did it again. Another higher high, and so, yeah, you're right, though. It's an interesting set of circumstances that lead us to that point. Having said that, do recall that the response to COVID in 2020 was part of what led to that next launch from 10,000 to 50,000. So we've had some Bitcoin price growth in a massive printing operation. I mean, that whole COVID response where they sent checks out to everybody and PPP to all those companies, and they grew the money supply 42% in 2 years. I mean, good God, that's never happened before. I mean, and that's why I say it's a really interesting and exciting time here, because we're definitely outside of the boundaries of what's normal. And right now it might not feel that great because I don't know, at least for gold guys, it doesn't feel that great because gold can't seem to get through 2000. But I mean, even this year, I mean, even in spite of the fact that Powell is pretending to be Paul Volcker, which he's not, Bitcoin's up almost 100% from the bottom. I mean, it bottomed at 15,000 fall of last year. I don't know the exact day or month, and now it's at 30. So, I mean, that's less than half a year. So, Bitcoin will smell it, gold will smell it, and we will be rewarded as the central banks do what they inevitably have to do. And that's the important thing, I think, for people to understand, that they absolutely have to do this. I mean, look, some people say, well, okay, what can make your thesis wrong? Try and be objective about this, play devil's advocate. And I'll tell you, and people laugh when I tell them this because it's not likely, but I say, yeah, okay, well, here's what could screw us up. Okay. Let's say the government gets really responsible. Right, you're laughing, right? Let's say they, means test Social Security and cut Social Security benefits by 30%, and decide to stop funding Ukraine and pull out of all these countries that we've got military troops in, and cut the defense budget in half, and put spending caps on other areas of the budget. And suddenly, and raise taxes. And suddenly the budget starts to look like it's balanced. Well, in that particular case, I mean, I think Bitcoin would still do okay because of the adoption curve and all the other use cases. But gold particularly, I think, wouldn't do as well, because people would say, well, I mean, inflation is driven by deficit spending, which then leads to monetizing that deficit spending through money printing. I mean, that's the obvious and direct connection. Money printing leads to expansion of the money supply, which then leads to more money chasing the same amount of goods, which leads to higher goods prices, which is the definition of inflation, goods and services prices. So if in some way the governments would really start to get responsible, this wouldn't work as well. It would take longer. It wouldn't be as good a thesis as it is. But I mean, I just look at the U.S. as an example. You're in Canada. We just bumped our debt limit up to really unlimited for a couple of years, and they were bragging about how responsible they were because they put a flat cap on 7% of the total spending, like 93% of the budget they didn't even touch. They said, oh, but we're cutting back. This 7% can't grow for the next 2 years. Well, whoop-de-doo. I mean, that's, right? I mean, that's nothing. That's a rounding error. I mean, meanwhile, CPI is going to adjust Social Security up another 5 or 6% this year. It went up almost 9% last year. Meanwhile, the interest expense is running $850 billion a year as they continue to roll these bonds over at these high interest rates. It's going to go to $1 trillion, $1.2 trillion. I mean, last fiscal year in the United States, calendar year ended September 2022, the deficit was 1.3 trillion. This year it's going to be at least 2.2 trillion, maybe 2.3 or 2.4. So, the US is looking like a third world country, fiscally and financially, which leads to money printing, which leads to the thesis that we are playing, which is that, fiat always gets debased. It's just math. I mean, that's Greg's line, being true now more than ever. And so you've got to hold scarce assets,
No, exactly. But you brought up like Bitcoin doing a little bit better in a certain scenario than gold, and I kind of want to dive into that a little bit with the COVID scenario, right? Because we had the massive amounts of money printing, right? The 42% printing in 2 years. Bitcoin seemed to perform really well, right? It shot up to the all-time high, and then obviously, now it's kind of floating around like 30K ish time ish
Yeah.
right now. But the narrative kind of going around that time was like, gold was supposed to be the inflation hedge, and it didn't do really well in that time.
Well, it's yes and no. I mean, in gold terms, it did pretty well. And a couple things to remember, because I was riding both of those at the time. There was a time gold actually smelled it first. So gold pre let's go back to pre all that stuff. Kind of let's go back to 2017. Okay. Gold was kind of stuck at 1365, and I don't know, Bitcoin, well, 2017, 2018, 2019, Bitcoin was some in the $3,000 to $5,000 range. You know what I mean? Maybe a little higher, maybe 8,000 a few times. Gold moved first. Bitcoin kind of stayed in that 5 to 10 range through most, I don't have the charts right in front of me, but through a lot of 17, 18. And gold broke through 1365, and started going higher and eventually squirted up to as high as 2020. And so that's a 30-40% move in gold. In gold, I know by Bitcoin standards that's shitty, right? I mean, it's a 40% in a few years. That's shitty, but by gold standards, that's pretty dramatic. I mean, gold typically it goes up. A good year for gold is up 10 or 11%, and a bad year is down a little bit. So, but what then happened is, of course, Bitcoin was slow, and I remember it very clearly because I had friends who were in both, and the Bitcoiners were like, Jesus Christ, your shit's moving and mine's not. And I was like, yeah, I know, I don't get it. But then once Bitcoin started to move, oh, it blew past gold, right? I mean, and so, gold went up 30-40%, Bitcoin did a five bagger, right? So yeah, Bitcoin, I mean, this is why Bitcoin is the sharper spear, and it's the much better investment because it's got two things going on: the money printing and the adoption curve. Whereas gold just has the money printing, right? And so, but they tend to move in parallel. And honestly, Bitcoiners should be rooting for gold to get, even if Bitcoin stays at 30, Bitcoiners should be rooting for gold to get through 2050, which is the all-time high that it's seen in the last few years. Because if and when it does, it'll be a breakout. Everyone will know that. And it'll imply, in my view, it'll imply that Bitcoin's going to follow it, probably much more dramatically. But gold is more widely distributed. And I think it's the one thing it's pretty good at, and I've noticed how it trades over the years, is it kind of smells what's coming before it actually happens. It actually started moving before Powell did his pivot and before the repo blowout and before COVID stuff. Gold was moving throughout all of that. It kind of knew, for whatever reason, there's money printing coming. We're on the move. And then when it came, Bitcoin went berserk. And I think I'm looking for that same pattern on this next cycle. So I've got my eye glued on the gold price, and everyone says, well, gold has really sucked. Well, it has. For 3 years, it's gone nowhere. It's kind of bounced between 2050 and 1700. But, right now it's at 19 and change, 1920 maybe. And that's down 6% off the all-time high. We've had one of the most aggressive interest rate hiking cycles ever, and gold's down 6%. I mean, in the past, when you had very aggressive rate hiking cycles, gold would go down 20-30% easily or more. So to me, gold is aware of and smelling the fact that this rate hiking cycle cannot last, and it will not last, and that they will pivot. So, watch the price of gold, and in my opinion, it'll be an early warning indicator that the price of Bitcoin is about to take off too. And then put your money in Bitcoin because it's going to go much farther, much faster. So, yeah.
Yeah, that's for sure. It always seems to be that way, but it's interesting that you lined that out that way, that you're kind of like looking at the gold to be almost like the first mover, which is
It is. It's historically that's what's happened. Yeah.
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 And I mean, it makes sense. I mean, because the gold investors kind of have that hard money, knowledge,
Well,
and
there are more of them. There are
yeah,
more of them, and it's the whole world. And that's the thing. I mean, remember the world's not just the US and Canada. I mean, we're small. I mean, one of the things that's interesting, it's in the incrementum report. It's a very good chart that shows it. Last year, central banks throughout the world bought a record amount of gold. And frankly, a lot of these countries, they're like the old gold bugs. They don't really get it. I don't think India gets Bitcoin. I don't think most of China gets Bitcoin. I don't think, I mean, Russia, I think gets it a little bit more. I don't think the Arab states get Bitcoin. I don't think Brazil gets it quite the way we get it. And so when those countries are saying, hey, the US is out of control, they're seizing our assets, so they're going to do monetary debasement, their first thought is, okay, we got to buy more gold. Gold will protect us from that. I mean, eventually the first thought will be, we got to buy more Bitcoin, but they're not there yet. They're not down that curve I mean, this is an area where the U.S. leads because we've got more savvy Bitcoiners in the U.S. probably, than any other country in the world, right? So, I mean, I should say the U.S. and Canada, really what I call North America.
Yeah,
So,
no, I would agree with that statement, I would say. But
yeah,
you've been very generous with your time. But before I let you go, I got to ask one more question. So,
sure.
what do you think it's going to take to get to hyper Bitcoinization?
Oh,
Because
yeah.
wait,
Well, it's historically, it's always just been a loss of confidence, right? I mean, people need to realize that their money is losing value so rapidly that they absolutely positively have to protect themselves. I mean, everyone has within them a self-preservation mechanism so that when you're out in out in the jungle and a lion comes running at you, you run like hell or you try and hide so you don't get eaten alive. And if you look at Weimar, if you look at Venezuela, you look at anywhere where the money is being destroyed. I mean, you look at Turkey today or Argentina today, when it's a process, right? You start off with low inflation, then you get to medium inflation, then you get to high inflation, then you get to really high inflation, and you watch the financial of the country you're dealing with, and right now we're in one of those deflationary periods because look, the high inflation we had and what happened to the price of gold and Bitcoin, that scared the shit out of the authorities, and that's why Powell's trying to be a tough guy. He knows that there's a risk of hyperinflation here. He knows it. And that's why he's doing what he's doing for as long as he can do it. But at some point in time, there's going to be a bigger risk, which is societal collapse. And he's going to say to himself, oh, shit, I can push this hard, but I can't have societal collapse. Well, guess what? New inflation target's 4. We're going to have to live with 4 for a little while we, print some money and so on and so forth. And of course, that'll be the next leg up in this shit. And so eventually, what used to be 2% inflation, I mean, you get these ratchets. I mean, Tavi Costa on Twitter has a great chart which shows kind of the 3 waves of inflation in the 70s. And there were a couple of times they knew inflation was a problem in the 70s. They tried to solve it. They tried to tighten, and inflation went back, and they did, and inflation came down a little bit. But then they had economic troubles, so they loosened up again. Boom, inflation went back, and each time it was a higher low and a higher high. And of course, they solved it all because Volcker at the end of the decade went crazy, took interest rates to 20% and said, I'm going to solve this once and for all. And there wasn't, and they could do that because the debt level was low enough. And they did. And they got, they literally got inflation under control and put it back in the can. But they can't do that today because debt's now 130% of GDP, not 30. And so, what'll happen is the inflation will just keep getting worse each year. And eventually, maybe somebody who'll be elected who's a socialist, maybe we'll get an MMT person in there. People will be really hurting. We'll go to, CBDC and universal basic income. And, the government will continue to think it can get away with printing money. And once it becomes clear that that's the case, anyone who has money will say, I need to be outside of the dollar. I need to be outside of this currency. And that's what Austrians call a crack up boom, which is you get paid something in dollars, you immediately exchange it because it's going to lose value. And eventually when nobody wants to hold the dollar, well, then it's worthless. There's no point in holding it because it's worthless. And so, it's Hemingway's, gradually then all at once. And, it's like Balaji had a great uh, podcast with Marty Bent. It was long, but he talked about how Russia fell. And, and the parallels are good, by the way. I mean, Russia was lying like crazy. All the statistics were fake, et cetera, et cetera. But just eventually one day it just kind of imploded. And I think that's what will happen here. I mean, when confidence is fully lost in the government and the Federal Reserve System, everyone will say, what do you mean you don't own gold and Bitcoin? What are you, nuts? You like being robbed, and inflation will be just raging, and eventually the currency will become worthless. Now, having said that, there's a possible stopping point before we get to that stage, which is kind of a little bit of what Roosevelt did on the opposite spectrum when we were in raging deflation. And that is what I call a government reset. I mean, if somebody were really smart at the Federal Reserve and within the government, they would say, oh, this inflation's out of control. We need to have a reset, and they'd try and wipe out the debt and, have a new dollar replacing 5 old dollars. And, in effect, the new dollar would be based on something sound like oil or Bitcoin or gold or whatever, something you couldn't print. And, we'd reset it and try and get inflation under control. They might try that. They might try a CBDC. I mean, they're going to try anything they can to maintain their privilege because they're a bunch of crooks. But and we know that. But meanwhile, they can't print Bitcoin, they can't print gold. And, I'm willing to bet that whenever their currency fails, these are the two best alternative currencies. So I think others should make that bet, even if not with all of their, net worth, or even a huge part of your net worth, with a piece of your net worth. Because, you know, I mean, if we have hyper Bitcoinization, Bitcoin's going up 100x or more. Gold's going up 10 or 15x or more. And so even if all you had was 10% of your portfolio in these two assets, you would effectively protect all the other part of your portfolio that became worthless because the currency it was in is worthless. So you don't need to be 100% in this shit. But I talk every day to people who don't own any of this stuff. And I'm like, what are you, out of your mind? I mean, they got 60-40 stocks and bonds and real estate, because that's what's always worked, and look, they're right. I mean, for 40 years in a deflationary world, it was a good place to be. But we're not, the rules are changing, and we're not in a deflationary world, not for the next 10 years. We're in a massively inflationary world because of the way the central banks have mismanaged all of this. And that's just, to my way of seeing it, that's just a fact. So, the difficulty is you got all these zigzags. There's a great chart on Twitter done by Dan Oliver at Murmachan, which shows gold priced in Marx and the Weimar Republic, and it's got all these huge zigzaggy lines. I don't know, you can maybe put it in your show notes, but it's going to be volatile, and that's hard. But you got to know what you own, know why you own it, recognize that 2, 5, 10 years from now, I think you'll be very glad you own sound money assets, because I don't think there's anything that indicates to me that the governments are going to get more responsible and make the dollar a better store of value than it has been. I don't see that happening. So.
Yeah. And I agree with you. I don't really see it
Right.
happening.
I mean, now if that starts happening, we got to rethink this a little bit, and
Yeah.
maybe your weighting in this stuff isn't as high, right?
Yeah,
But
exactly.
I haven't seen it. I mean, capping 7% of the expenditures of the U.S. federal government for a couple of years, that's a Band-Aid on a gaping wound. That doesn't solve it.
Yeah, exactly. But you've
Yeah.
been very generous with your
Oh,
time.
it was good to be with you. I enjoyed it. Nice meeting you.
Yeah,
Happy
it
to
was
come back anytime, and
yeah, for sure.
bullshit
So why
about
don't you
this
tell
stuff. I mean,
people?
as
Yeah.
people probably know, I don't know if you know it, but you know it for sure. But people should know I'm a big loudmouth on Twitter. I try and be kind of the leading advocate for sound money. So, and I don't like the central banks, and I don't make. I'm not ashamed of that. I try to let that dislike be known, and I think everybody should not like the central banks. I think they've caused a lot of people a lot of pain. And I think we have to do everything we can to return to sound money. Fix the money, fix the world, and eliminate central banking. It's a curse. It's a total
Amen.
curse.
Yeah. Yeah, no, I agree 1,000%. I mean, and everybody should follow Lawrence on Twitter. It's
Yeah.
just his
Just
name,
my
right?
name, Lawrence Lepard. Yeah.
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 So follow him on Twitter, and yeah, man, thanks so much for coming on.
Oh, it's like I said, you're welcome. I'm happy to come back. I enjoy talking to you.